Hello, ladies and gentlemen. Welcome to the show today. Listen, I'm glad to have you guys here on this Monday, December 26th. No, Monday, October 26th, 2020. Anyway, listen. The next number of months are going to be a danger. It's a dangerous period in time. And basically, it works like this. The way I see the economic system is like a body. The whole world like a body, you know. The highways are like arteries, you know. And the people, you know, those are like the blood vessels, you know, moving down the arteries and everything else. So it works like the entire world economy is one big unit or one big body. And it's like right now it's sick. It has a fever, you know. To be honest, you know, it's like an elderly person, really, and the entire world has a fever, and they're going through the danger zone, the dangerous period where the fever is going to break and whatever, you know, over the next few months. If we can get past all of this and get into the springtime, you know, probably the next 4 to 6 months is the most dangerous period for a crisis, an unparalleled crisis. And you know, today we got the stock market falling today, you know. But I don't think they're going to let it fall that far before they come in with some sort of support. Once they get alarmed, you know, once the stock market falls to a certain point where the Federal Reserve gets alarmed by it, then they never act. They always act after. They wait until a situation occurs and then they respond to it. This is how they function. So the world is sick right now. And quite literally, I can't see it really getting that much better until we get over this sickness that's causing the sickness to the world economy. Let's get started. Let's open up the charts right here and take a look at what's going on. Silver price is $24.41. You know, one of the things I want to say about all this is, if we can make it through these next few months and get into the spring, and of course, like everything, you know, like going back to the 1918 influenza pandemic they had, it doesn't last forever. If this thing starts to pull away, if we peak in this thing, maybe in December or something, you know, or January, and it starts to pull away, there's so many businesses have closed and everything, you know. I mean, just take a look at that show I did yesterday, you know. At that point, if things started to spring back, and it would, the way I see it, kind of like if we did advance into the spring, you know, and this thing started to pull away, it would be along around that same period in time that they would be all into this new stimulus and everything, you know. There would be all these new stimulus packages coming out and everything. And that money would really start hitting the economy, and people would want to buy. They would want to get out. You know, they've been locked in their houses, a lot of people have, or they haven't been doing this and haven't been doing that. They haven't been going out to restaurants and stuff, and all of a sudden they would want to. Say, let's look ahead in time. Let's say, like maybe next spring, you know? And there's new stimulus checks coming out, and maybe the government's got this new Banking for All Act in, and they've given everybody these new wallets, and they're pumping money into these new wallets, this new digital money and everything, and everybody's got the same idea at once. They want to go back to their old lifestyle. They want to go shopping. They want to do this. All these things they've been putting off. But, you know, the stores have all closed. You know, the restaurants have all closed. Well, you know, the few restaurants that are left open and in business would be swamped. The few airplane flights that are out there left would be swamped. Everything would be swamped. So what would happen is new guys would come in and say, well, I'm going to open up a new restaurant there. Well, because the economy would start to turn up, well, the banks would start lending money again. They'd be looking for people that want to borrow money. And the first thing you know, we could go into an economic boom. That could happen, caused by this slowdown. Could cause a rebound effect. Well, what would be the net effect of that is that's when we would see the monster be let out of the cage. Inflation like you've never seen before. And there would be no stopping it at that point. It'd be runaway inflation. And that's the monster. That's the real monster. That could lead to the hyperinflationary consequences, ultimately, if we get some sort of a rebound coming when this virus starts to leave. And people lose the fear. I don't care. You guys out there, some of you guys that say, okay, the virus is not real. Okay, the virus is real. It doesn't matter to me. The effect that's happening right now with all these frightened people out there who are not spending. This is what I'm looking at. See? The effect. It doesn't matter to me whether, well, it does matter, but the reality of the situation is people are frightened, whether the virus is real or not, and so what I'm looking at is are they out there spending? No, they're at home, they're shuttered in their house because they're scared. But once they get the green light, hey, everything's good again, well, they're all going to be coming out wanting to spend, especially if they're getting new checks in the mail from the government, from them, some sort of new programs or whatever, that's going to put money out there, and say UBI comes along, then even the poorer people are going to have lots of money to spend. Boom! And the government might be fully embroiled then in new fiscal policy, new fiscal spending, where they've got everybody with these new credit cards and stuff, these new little, they've given plastic cards to almost everybody in America and the money coming directly from the Fed. Once they put these programs in, they can't take them out, guys. And it's the highway to hell for inflation. Well, what's gold and silver going to do then? You think gold and silver have, once all these people out there, retirement funds and all of these people out there, once they realize, hey, you know what? My dollar's going to toast, and there's only one real safe haven, and that's to get out of the dollar, and that's the gold, silver, and cryptos. Once they come to that realization, the sky's the limit for the price of these things. So be patient, guys. Be patient, because we're still withering through this period, a little bit of deflation going on. It's keeping the prices down on these asset classes. But once the real big inflation comes, and I see it just up ahead, I'm seeing it maybe a few months out, maybe March, maybe starting around March or April or May of next year. Once that hits, oh my goodness, the price of these, the sky's no limit to how high these can go. Priced in dollars. $24.40 today for silver. It's down 18 cents, but that's not that bad considering what's going on in the markets. Taking a look at cryptocurrency today, 391.9 billion, 61.6% Bitcoin dominance. Looking at a Bitcoin prices, $12,965, so it's just under $13,000. So crypto's doing good. Crypto is actually picking up a little bit more than gold and silver has lately, Dow Jones today, it's down 721 points. 731 right now points. 731 points down at 27,603. And what I can tell you about this is, it's fell enough where it's going to be making the Federal Reserve nervous. Makes them nervous. Any little small fall now makes them nervous. They've got circuit breakers in the Dow Jones and in all the major markets, all the major indices. They've got circuit breakers in. S&P 500, doesn't matter. NASDAQ, they got circuit breakers in. Over the next 6 months, they need to change the circuit breakers, because we are in danger of a massive collapse that could happen out of nowhere. And, of course, the circuit breakers will go off, But it's not enough. A 15-minute circuit breaker is not enough for this. Because once the market comes back on, it could fall again until the next circuit breaker. These circuit breakers they got in place right now are not enough. They don't have enough duration. This is the problem. I think the first one kicks in at 7% loss in one day, and it's 15 minutes. They need to work on these circuit breakers right now because there's danger. They need to lengthen the duration of the circuit breaker. At the very least, make it until the next day's trading. So if the circuit breaker goes off, you get a fall and the circuit breaker goes off. Give the officials that are in charge at least 24 hours to react. 15 minutes isn't enough. They'll just run around the scramble not knowing what to do. The circuit breaker will end 15 minutes and the market will come back on. It'll plunge again. They need to get something in there. It's going to give them a little bit more time to react over the next 6-month period. They're going to need it for about the next 6 months. And because of potential failure that could lock up the system. Because what's happened, the system is over-leveraged, and this puts pressure on it for a quick, like the computers can, if one thing goes bankrupt, like say a big bank goes bankrupt suddenly or something, or there's some shock to the system, the markets can react to that so fast because of computer trading. They need a longer circuit breaker in there. I would say at least 24 hours. Just let the market cool its heels for a day. That's what they should do. And then that gives them a chance to come in with the plunge protection team or whatever, or do something to stop the fall. Now, I don't think we're in that situation today with a 736-point fall, but that fall today, a 736-point fall, could lead to some sort of a little bit of a panic situation where it falls further later. They got to do something like that. Okay, crude oil today, $38.62. It's looking a little bit weak. They've been keeping it at $40 for the longest time. It's down $1.23 today. You can see this long level plateau here. They've been keeping it at $40. It hasn't really deviated from that too much. Okay, let's take a look at bonds and rates today, and we're looking at bond yields falling today. 0.80 on the 10-year, so that's 0.8% on the 10-year, and the 30-year's at 1.59. Now, I've been saying for a while now, they want to keep these. They want to keep the 10-year at 0.75, and they want to keep the U.S. 30-year at 1.5. So it's not far off of that today. Let's take a look at the U.S. dollar index, and we're looking at 93.01, and it's been climbing a little bit today, just a little bit. The MOVE index, we're keeping our eye on the MOVE index, and it's been going along sideways at 58.46. That's a tad high, but it's kind of like it's going along sideways now the last few days. Now let's take a look at our funny picture today. I think they call these dogs a Shiba Inu. Am I pronouncing it right? I think they're a Japanese dog. They're awfully cute. They're the cutest dog. They were the dog behind the coin, Dogecoin. Dogecoin. One of the cryptocurrencies. And they were supposed to be a joke. The cryptocurrency was supposed to be a joke, Dogecoin. It turned out it wasn't a joke. It became a real thing, and it still is, and it's got a lot of potential as a cryptocurrency. Anyway, they're awfully cute, I think, that particular type of dog. He's got a big smile. Who says dogs can't smile? I'm going to tell you, that's definitely a smile. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next show. Bye-bye.